Good morning, guys. I hope everyone has had a fantastic week. My name is Samson Mzera. Welcome to today's live session. We have quite a lot to go through, especially with regards to what is happening in the markets and just trying to understand and make sense of it. I'll be taking you through today's session. Again, hi in the comment section, Mercy, Kipto, Christine, Susan, Lemuel. I'm seeing frequency. So I think we are good to go. Today you have a lot to discuss, especially with regards to what is happening with this dollar. Seems to be getting strong and strong every day, and it seems to not be ending. So I will start us off with the main event for this week, which was the FOMC minutes. So we'll go through the minutes. The minutes usually dictate the way forward with regards to the economy of the US, and it also dictates where the markets are going to head. So let's just switch over. And if I'm on the wrong chart, because I realized last time I was discussing one thing while using another screen. So just in case you're not seeing the chart and I'm talking about the chart, then I'm probably on the wrong screen. Then you can just let me know on the chat section. So let's start with going through those minutes because they're very, very hot. They caused the dollar to continue being stronger for the better part of this week, and it will explain a lot going forward. So we had minutes coming up, and so let me just open the news first. So this was basically this week, yeah. On Wednesday, where is Wednesday? It's Tuesday. Yeah, on Wednesday we had minutes, and these minutes are usually what the Fed has discussed, the Federal Reserve Bank, what they've discussed. So it's here, so you can access it from here. So if I just say latest release, it takes you here, and you can see for 2023, these were the meetings, the minutes of the meeting had in July, but released on August. Yeah, so they'll give you a lot of direction as to where the market is heading, depending on what they discuss. And what did they say? So if you go through this, it's pretty long. Let me just zoom in so that you can all see it. Again, so we'll go through these meetings, minutes, and then try to make sense of it on the charts. So I'll be going back and forth from this. Okay, so the first thing here was this, the commentary on the economic outlook. The stuff. I hope this is clear. If you can't see the writings, just comment on the chat section. Okay, so they're saying the economic forecast prepared by the staff for July FOMC meeting was stronger than the June projection. So first off, we know that the US economy has been very resilient, and despite the fact that the Fed has been raising rates, the economy has still been doing good. So indicators like price consumption index, jobs, everything has been looking great. And if everything is looking great, then this means that the Fed can continue doing what they're doing. And at the moment, they've been really raising interest rates, which is not good for the economy. So if you see things like this, where still they're raising interest rates, but it's not even affecting the economy as much. So the staff projected that the total and core price inflation would move lower in the coming years. Much of the step down in the core inflation is expected in the second half of 2023. Yeah, which I think we are in the second half. So we should expect it to come down. And then inflation was expected to ease further. Yeah, inflation was expected to ease further over 2024. Okay, now the staff continued to judge that the risks to the baseline projection for the real activity was tilted to the downside. So they're seeing that there might be some risks in terms of economy and it's slowing down a bit because of the fact that they've been raising interest rates. But as you can see, numbers have been good. Jobs, people are still working, and they're still jobs numbers, employment numbers, work payment hours numbers, they're still okay. So they're starting to see that there might be some risks, but we are not quite there. So risks to the staff baseline inflation forecast was seen as skewed to the upside. Now, this is what made the markets drop, or what made the dollar really strong. So they're still saying that despite the fact that we saw lower inflation in the previous reading, they're still saying that it might come in higher. So if you're not understanding what we're talking about, you can just attend one of the classes, come physically to the office. But just to make this easy, high interest rates usually have an effect of having a strong dollar. And if you see a strong dollar on your charts, then you know maybe you should be looking to be buying the dollar, and that's how you're going to make money. So we are trying to gauge, are these interest rates going to continue being higher? And hence, is the dollar going to continue being stronger? So that's all you're discussing. So when they say, and the Federal Market Committee is the one that decides where interest rates are going. So they have to assess the economy, and then from that produce their judgment on where they think interest rates are going to go. So anyway, so risks to the baseline inflation forecast was seen as skewed to the upside. This simply means that they see inflation possibly being higher, or there's a huge likelihood of inflation still being very high, despite the fact that we had a lower CPI reading previously. So this is one thing to really take note of. So given the possibility that inflation dynamics would prove to be more persistent, so they're saying inflation will continue being high, or it will refuse to come down than expected, adverse shocks to supply conditions. So moreover, additional monetary policy tightening will be necessitated. So they're simply saying there is a strong chance that we will have interest rates maintained at a higher level for longer. That's simply it. Yeah. So coming off this and going to the markets, so let's just have one look at stock markets before we go to other markets. So back to my charts here. Okay, so if I do the 1 hour chart like that, you can see that this was Wednesday. So this was Wednesday. This is NASDAQ. This was Wednesday here. So between this dotted line and this, so after that release came, we had this downwards move. Yeah. So then when interest rates are high, it tends to hurt stocks the most. And that means things like NASDAQ, things like S&P 500 will generally continue going lower for longer. And that's why on Wednesday we had this drop past this level, and now it seems we're even going lower. So let's just step back on the bigger picture. NASDAQ has been on the rise. Most of the stocks have been on the rise since January, but now we're having this massive pullback here. So I'd say that going by the current state of affairs, we expect probably the general direction to continue going lower like that. Yeah. However, if I zoom out, this is a fib level. We are currently at the 23 point level to watch out for on UT 100. That means, in as much as my bias is to the downside, I wouldn't want to attempt to trade through this point until it has cleared it. That means if I go to H4 as such, I'd want to wait, for example, for a pullback, a slight retracement on this move, and then I can attempt to get in when it pulls back, or I can attempt to wait for the pullback to clear this level for me to continue being short or selling in this market. That's simply what this means. When you're doing technicals, don't try to trade through levels, key areas, support and resistance zones. Wait for the market or watching out for with UT 100. Same applies to US 500 and US 30. The chart should be looking almost the same. So we've cleared stocks let's now hop over to our favorites, currencies, and we will start with Euro USD. Yeah, so let's go back to the fundamentals a bit and then come back to this chart. But you can see on the daily, we have this upwards channel, and we have been going lower for some time. On the 4 hour, we are anticipating, so we've had a hurdle here. The market seems to be heading for this level, but let's first look at the fundamentals before we continue with these technicals. So I'll hop over back to our screen for fundamentals. Okay. So this is what ING has for us today. This is one of the sites I usually use for my fundamental analysis. So they've given some estimates and a forecast of how they think the euro is going to go. So they're saying it might probably start going up, but let's just see if that is the case as per our analysis. So last month we thought US CPI could be a trigger for a cyclical dollar decline. So everyone was thinking because CPI came in lower. Let me zoom this in. Everyone was thinking because CPI came in lower, then the dollar should be weak. Yeah, but that wasn't the case. Yeah, the thing, but that was the case. So two factors probably driving the dollar resilience. So they're trying to explain why the dollar is strong. The first is US activity here. So again, as we said earlier, the US economy is looking very strong, and that's why the US dollar is still going to continue being strong, are holding up well, even as prospects of China and the Eurozone appear to deteriorate. So everyone is simply investing in the US because when you look at the other two major economies, which is the Eurozone and China, it's not looking so great. So probably that explains why everyone is rushing into the US and to buy dollars. Then the second is the prospect. Now, the second reason why the dollar can be strong or is strong, the Fed staying on hold for an extended period. And this, as we have seen on the minutes, have been confirmed. So you might see the dollar maintaining its strength for longer. Yeah. And then, so that's it. So for some reason, they're expecting the euro to rebound to around, so their forecasts are in the coming 1 month, the euro will come back to 1.1, which I don't think is the case, because if you, now the argument is a carry trade and something like that. But before we go to the carry trade argument, let's have a look at Euro USD. So let's go back to this chart here. Okay, so this is the chart for Euro USD. On the daily, you have this channel, so you can plot that out. There is a huge likelihood or high likelihood of us continuing to the bottom of this channel here before we have prospects of it coming back up. But in the event we start to see reversals, then reversals will prevent, again, good shorting opportunities. So if I see the market move this way without a proper explanation, then it's a good opportunity for me to look for shorting areas. Now, the other thing that we need to look at is we had the market shoot up from this point, and we have a series of equal lows over here. So there might be some good prospects that if you're trading liquidity, there might be some stops over here. So the market might want to hunt and go lower first. In the event that for some reason we want to go higher, this is still a very viable target if you're not going to get to this low over here. So this can be the first target, this is the second target. So if you're using trend analysis, or if you're trading using trends, this trend is likely still going to continue. So just use your trend trading strategy properly and see if you can take Euro USD lower. In the event it does not go low, then wait for a clearer signal. Probably if we clear 1.09646, this level over here, where we had this move shoot down, that's when we can start thinking of a Euro USD as a buy, but it's looking very highly unlikely. And I think looking for shorts in this market is the most likely case. Another thing that backs that is, let's go back to, so there's what we call carry trade. So there's what we call a carry trade. So let's just look at US government debt and compare it with EU government debt and see, we can derive a lot of interesting things from there. So let me just close this. So if you look at the US 10-year Treasury, if you look at the US 10-year, I hope I'm on this chart. If you look at the US 10-year Treasury, you can see that it's giving an interest of 4.25. Yeah. And if you look at the Eurozone 10-year government debt, it's giving an interest of what? 2.624. So it makes sense for a trader to borrow from the Eurozone and then buy debt in the US. That's called a carry trade for those who are doing studying such things. That means that for the time being, before we have a pivot or signs of a pivot for the Fed, that means changing their views, it's highly likely that we will continue being in a downtrend because the US dollar, the US treasuries are looking more attractive than the EU treasuries. Yeah. Okay. So that explains our long-term view of Euro USD here, and why we think this trend might continue heading lower up to this lower side of the channel here. However, it's not a very strong trend, which is very apparent. So if it's choppy, that means if we have a possibility of us having a very choppy market, that means it's moving up and down until finally we come there, which is still okay. But the general direction or the general thinking is we might still be heading lower with Euro USD. How we get there is the question for technical analysis. But the general theme is we will go lower for this. Okay, let's go to the next pair. So take note of Euro USD. And when you're talking about GBP USD, also take note of it for those who want to trade Euro GBP. So you know that Euro USD has a high likelihood of still being weak. And we will talk about why this one is in a sideways trend and not a downwards trend like Euro USD. So before that, let's jump into USD JPY. Start with the fundamentals again, and then come back to these technicals. But remember the last time we said the Bank of Japan announced some intervention at this point on November. Yeah, and then we had this sharp drop. And the market today, the past 2 days, has come back to this level. See how we sold off exactly at that point that we had marked initially. So let's now talk about what is happening in Japan. Let's go back to this. Yeah, we'll talk about the pound in the next chart is the pound. Okay. So we have USD JPY. Again, so the forecast for ANG here is that we might be going lower for both. Yeah, so if you want, I think if you just go to this website, you will see this article there. Okay, anyway, so quiet markets in the summer. So popular funding current. Okay. Occasional bouts of risk off, like the bond sell-off in early August, will trigger short covering rallies on USD JPY, but we need to see a sustained rise in volatility to upset the carry trade. So a carry trade is when you borrow from a currency with a lower, from a country with a lower interest rate, and then invest in a country offering higher rates. So the idea is we are currently on an uptrend in USD JPY because of the carry trade, because the US is offering higher interest rates than Japan. However, last week, or is it last month, BOJ tweaked, or is mine not highlighting? Yeah, so the BOJ tweaked their yield curve control. So the Bank of Japan controls or does their monetary policy by way of managing their bonds. which is called yield curve control. So they increased how much their bonds can yield to 1%. That means there was a short period where selling the BOJ allowed guys to like sell treasuries so that it comes to that level of 1%. The yield comes to that level of 1%. That means, so this failed to, okay, so lifting the cap on the 10-year yields to 1 from, yeah. So this failed to lift the yen at this point here, yeah. So remember, anytime the Bank of Japan saw interest rates or the yield going to like 0.6, they'll start buying the government treasuries, the Bank of Japan treasuries, and that will bring the yield down. That means there was an oversupply of Japanese yen, and they have stopped that by letting it go to 1%. So the expectation was the yen was supposed to be strong, given that they did this, but it hasn't done much for it. So no further BOJ change will be expected until late October. However, it looks like the BOJ will have to intervene at what? At 145. Yeah. To limit USD JPY going higher. Yeah. So that's one thing you need to note. The BOJ, again, as it did last time, intervened. That means they are trading like you and me, or the Bank of Japan will come into the market and start trading like you and me to push USD JPY lower. So that's something you need to take note of. And we assume our call for a weaker dollar in the fourth quarter, plus some further BOJ adjustment, will send it back to 130. So ING is expecting 130. I'm just expecting a downtrend, or at least subdued price movement. So when you look at the chart for USD JPY, so on the weekly, this is what we have on the weekly. Is this a channel? This looks like a channel. Let's see. Or I'll be forcing issues. Maybe. So remember the last time USD JPY came into this point, they intervened. So they're saying if it goes past 145, they might have to intervene again. Yeah. So that's very risky for someone who's trying to continue buying USD JPY. Yeah. The best thing to do as a trader is look for areas. That's why we wrote here last time, limited upside. The best thing to do as a trader is to look for areas to attempt to short, to sell. However, it's not very straightforward, and I'd recommend you use your technical analysis and use a longer time frame to analyze when possibly USD JPY is going to change in direction. It might not be today that we see this going lower, but we know that definitely the Bank of Japan will not allow it to go too high. Yeah. So be careful when trading USD JPY. Yeah. Okay. Let's go to our next chart, which was GBP USD. Okay. So here we've had for the better part of, I think, the last 2 weeks, it's been very chaotic, very choppy. It doesn't have a clear trend. And that's because the interest rates for the UK are very high. Interest rates for the US are very high. So there's no opportunity to do a carry trade or an interest rate differential trade on this. Yeah. So let's look at the fundamentals before we get back to the technicals for this. Okay, so that was all with the USD JPY and what a carry trade means. Simply borrowing from, okay, before we continue, here, I hope you can all see this. These are the central bank rates. Yeah. Assuming these rates are as is, if I borrow from Switzerland at 1.75, I'll be required to pay an interest of 1.75, and I go invest in a country offering me 5.5, I can use the returns on that to cover the amount of money I've used on Switzerland. So that's basically a carry trade, to explain it simply put. Okay, so yeah, so you're talking about GBP USD, you can see for pound, interest rate is at 5.25. For USD, it's at 5. For euro, it's at 4.25. So this is where we're trying to see what's the way forward. Let's go back to this. Discuss a bit about GBP USD. Okay. So one thing to note, I won't go through this entire article. The Bank of England, GBP, is still sounding hawkish and barring a downside surprise to July CPI. So they're trying to prevent CPI from, they're trying to make sure that in as much as CPI was slightly lower, that we don't have any risks to the upside, or we don't have a higher reading in the CPI. So they're still looking to raise interest. It's very clear that for the pound, these guys are still looking to raise interest rates for the day or for this year. We look for one final BOE hike in September, and 5.5 should be the peak. Yeah. So the thinking here is it should be the same, should come to the same as the US, which is at 5.5. However, if you compare 10-year yield for the UK, this is the government yield for the UK, it's around 4.684, while for the US it's 4.225. So clearly, it seems as though UK bonds are looking very attractive, and the market is implying that we might, let's see. Just a minute before we go on. Do you have a okay? So we'll just have to do research on that. But yeah, the market is implying that we might see higher rates from the UK economy, yeah, from the Bank of England. And if you were to go back to this article, as for the dollar, the carry trade is neutral for sterling. And if we are right here for cyclicals, the assumption is eventually the Fed will start cutting in front of the BOE. So while the Fed eventually starts to reduce interest rates, the BOE will still be having high interest rates. That means there's a high likelihood of pound going higher. So that's the whole inference from this over here. So let's go back to the chart for pound. Oh, before we get to that, where is it? Is it this one? Or is it this one? I think it's this one. Yeah, so I think they're basically saying the same thing. I was trying to see if there's anything I've missed from these two. Okay, so let's go back to our charts for GBP USD and see what we can get from there. Okay, so going back to the charts, and this also answers why GU is in a red. You expect the dollar to continue being strong, and because you expect pound to continue being strong, there is no clear direction for where this might go. But that makes it good if you are trading ranges. If you're trading reversal patterns, it's very good to try out this pair. So the last time we had marked this area over here, we saw prices going up from this point. And indeed, prices came back to this region that we had marked the first time and a second time over here. Yeah. So this is looking like a very, just a minute. But yeah, so as I was saying, because you expect both BOE to have high rates and the Fed to have high rates, this should be about an even battle. We won't have any clear trend going forward. So it presents a good opportunity to look for reversals, especially for traders who are trading ranges. Just try and spot key areas in GU that you can use. And just try to trade out the reversals, because going forward, I'm guessing it's going to be very tight in determining what's the clear direction for GU based of those results you've stated. However, if you still want to trade GBP as a currency, you can now look at, let me change this one, Euro GBP, because now you know Euro GBP is in a downtrend, because since you expect the Euro to be weak and pound to continue being as strong, then this is clearly a downtrend. So you can look for selling opportunities on Euro GBP if you want to trade a trend. But I want to get into the analysis of this because we still have a lot to talk about at the moment. Okay. Let's see. So we've covered USD JPY, we've covered GU, we've covered stocks, UT 100. Okay, let's go to gold. The downtrend has been very aggressive. Okay, so on the daily chart, this is what we have. Let me just zoom out. I think we'll do this analysis together. My mic was on mute. Okay, so again, Zoom restarted, so I have to set everything up, but apologies for that. Okay, so I hope you can hear me now. I hope I'm audible. Okay, so there's this area over here that we seem to have taken these lows. There's this point over here this week. Yeah. This week over here, which we seem to have taken at the moment. Now, in the event, gold has a very stable trend, and a stable trend means you're seeing wicks, candles like this, but with very healthy wicks like that. So chances of having a strong reversal or a retracement, or the market doing this in a strong way, is very slim, and probably continue having very small pullbacks until you have a clearer direction. But at the moment, it seems apparent that for gold, chances are we will continue trending lower. I remember we had CPI, was it this one? I think it was this one. And then No, CPI was this one, sorry. CPI was this one. I remember having this trade on CPI, which was this one over here. So you have this characteristic where gold shoots really down, shoots really aggressively lower. And then what happens? Comes back up to an area of initial selling pressure, which is here where we started, and then it goes lower like that. Even during, I think this was yesterday. Was this yesterday? Oh yeah, this one. Yeah, we had gold move lower like that, and then come back to an initial area of supply over there. This time it didn't quite, oh sorry, it's this one here, and then it continues going lower. So at the moment, I'll be curious to see if we will come back to this level before we can go lower. Yeah, this is the last up candle before a down move. That's what we've been, that's the simple pattern we've been looking for with gold for the past 2-3 weeks. Yeah, whenever there's news, you just look for supply zone, and then we see if it's going to shoot into that and continue heading lower. This was CPI. This was last Friday's news. What was it? We had, was it PPI this week that we had this? And then, yeah, so it's a very straightforward trade. I think it's loading. Yeah, but the setup for gold is usually straightforward, especially when it's in a trend. And this also provides an opportunity to have very tight stop losses, just in the event where the analysis is not correct. You still have a very tight stop. Okay, I think that's it. We've covered quite a lot, and I think our time is running out. So I'll just go through the questions. Apologies for the connection and the internet and everything. Okay, so hello Sam, kindly look at the 10-year yield and the XY. Seems they're at a key level. You might expect a pullback. Okay, let's look at that. So the XY is the dollar index. I'm reading this from the charts. The XY is the dollar index, which is simply the dollar priced against a basket of currencies. It's what traders use to have an aggregate feel of the strength of the dollar. So again, so I think we can go to a chart, maybe a US what? US 2? Do you have US 2-year treasuries? Should. Or is it US 02? Yeah, it's US 02. Okay. So, just a minute. I think having all these screens is really straining the live stream really strains the machine when it's okay. So let's try and look for US 02. US 02, yeah. Like that. Maybe not too long. Yeah. So US 02, and then we've said DXY. So you can look for DXY on MT5. So just a minute, try and find it. Show all. So just keep your questions coming. Let's see what else we can look at for today before we start. Okay, I'm not seeing DXY here. It should be somewhere here. You can just open another window once we're done. Okay, so for the US Treasury, 2-year Treasury on the daily. So if you're trying to assess the macro outlook, the best chart you're going to use is a daily chart, because everyone looks at the same chart. And then from there, once you've found whatever it is you're looking for, you can now do other sorts of analysis. Okay, yeah, so indeed we have somewhat a peak on the US 2-year yield, and I'm thinking it's the same for the US 1 year. So let's look at the 1 year also. So this one gives you an expectation of where interest rates, yeah. So the expectation is we might not see, if the chart fails to go higher, the expectation is you might not see another hike from the Fed. Now ask yourself if that's the case. Are we likely not to see, given the minutes we read here, given that from these minutes they're saying we've assessed and we might need, the inflation is persistent and things like that, chances are we might see another hike from the Fed. That means the yield hasn't peaked yet. Investors might take that as a sign that this might continue going higher. Remember, it spiked up a bit, but yeah. So that might be a sign that we still have some upside room to go, because the yield tracks what the Fed is doing. The 10-year yield tracks. And having said that, it also means that for dollar, we still have room to go higher, including the DXY. I don't have the chart of DXY. I don't know why it's not on my watch list. But yeah, I hope that answers your question. We still have room to go higher. So I don't think it's over yet. What's the outlook for gold today? So for gold, again, I'll be waiting for it to come back to a zone. Remember, because gold has been trending, the play is very simple. From where it starts selling off here, you see if you're going to find reversals into that region, and then we go lower. That's what we've been doing, especially when there's been news releases like this one. This was on 15th of August. I remember trading this one. Let me see what this was. So you had that push upwards and then a continuation. Wednesday. Is it FOMC? It's not really. This is 15th August. Yeah, it was Empire State. This was Empire State and this was CPI. So you can see that where we started selling off, market usually shoots back there and then continues going lower. Same story as here, where we started selling off the previous day. The next day when there's news, the market goes to that point and then we go lower. So that's what I'm looking for today. In the event we have a spike into this region, but I'll probably need to refine this. Then we'll start looking for selling opportunities. The only time it'd be long is when we cross back. So the only time we start looking for longs, and it's very unlikely, is when you cross past this point and fail to come back down, which is also very unlikely. So those are the two chances. So the dollar is looking very strong. We're still going lower. There's still room to go lower, even with the XY still likely going to continue going higher. Okay, I think that was a nice session. Thank you everyone for attending. And let's see if you can find good setups for this week. If you've missed out on any of this, any of the discussion, you can just rewind on this video, and then from there you can get to, what is saying, preparing live stream. Yeah, and then from there you can get to just go through it. If there's something you need to learn, I think if there's a new term or something like that, or a new concept, just Google it, rewind it, and then you Google and then see if you can get something from there. Otherwise, have a good trading session. See you in next week's market snapshot, and happy trading.